The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome to another exciting edition of the Power Trading Hour with me, your humble, lovable, squeezably soft host. And we've got a market that, at least on the S&P cash, is up 1.5 points. Not a big move out here, but what has it gone on? Has it been 3 weeks I've been talking about a flat market, just maybe slightly higher, and going into Thanksgiving. Right now, we've got 1.9 billion shares, so the volume is light, or lighter. But I think we're starting to get back into these patterns where we have light Fridays and Mondays, and the volume comes in Tuesdays, Wednesdays, and Thursdays. Still thinking that there's probably only a couple of stumbling blocks between now and the end of the year for the market to go probably slightly higher. And, you know, could I see maybe 2070 as a high? Maybe we go higher, but I mean, I could truly see that we would see maybe a 2070 close at the end of the year and just drive everybody totally batty between now and the end of the year. Probably after Thanksgiving, maybe we'll get a little bit more of a boost out here, but I could see the market kind of going sideways out here and digesting these highs for a while. Between now and the numbers for Black Friday, I only see one issue, and that is if the cold political war in the United States goes hot. There are some discussions about that in the news. I have no real idea which way that pops, so I've decided to hold my long positions. They are such and situated such that they have a lot of risk reward. I wouldn't be getting out here trying to be in a stock at 29 bucks trying to get 30 bucks out of it. It is going to be one of these things where if you don't have something that you can make a great deal of cash out of, I would probably be on the sidelines. I only found one option position that I really liked. I'll look for some other ones here, but we're probably going to know about the political fallout. Oh, what a lot of nuclear metaphors here. Cold War fallout. Anyway, maybe this is just something that's been coming to a head for a long time. Probably since, mid-1990s. Maybe it's just we need to blow out to get all the cobwebs out and have everybody sing Kumbaya again, but can't really say. Now, normally, markets like a lot of gridlock. And the question is, does this go beyond gridlock and what the market will allow or think? And I don't know how big a food fight it's going to be, but the one thing I can say is if it ends up with a market shutdown, we do kind of have a pretty good track record of how the market reacts to that. But at the same time, since we have done it each time, it seems like we get a little bit less of a reaction. Another reason why I don't think that I'm going to blink here, but hang on to my positions unless I get a true huge signal out here. I don't like markets. If I was going to be short, let me put it this way, I would have liked to seen this market already fail. I dislike markets that go sideways at highs because almost always you get one or two things, a false breakout to the upside or a real breakup out to the upside. Neither one of them you want to be short of. So I am I've got I would say, well, in my daily newsletter, I would have 1/10 of my portfolio out right now, and I would be 90% in cash. And that one position is actually an option position. So in reality, what am I, 98% in cash or whatever? So yeah, just keep an eye on it. I think that we've got some big money coming. I always like to hang on to the fat pitch. Got a question in the den here, but you can always call me at 877-927-6648. That's 877-927-6648. Question is, what do I think of the metals here? I don't have any kind of real belief that anything is significantly changed. It certainly looks to me like, because crude was getting beat up so wildly, that it looked like a lot of people were going into gold going into the weekends, the last couple of weekends, as a safe haven in case something really horrible happened. And not uncommon to see the weekends hedged out that way. And for years, well, in the last few years, it's always been the crude market that everybody piled into on the weekend. I don't like the fact, I mean, you're hanging the highs up here in gold. But I would have rather seen silver come along for the ride out here, also platinum. That both those metals out here that are weaker today means that I don't have a real good feel for it. And I was actually recording one of the chapters for my forthcoming audio version of Reminiscence of a Stock Operator. And they were basically talking about a great deal of what happened in the early parts of the century. Not a whole lot different than what's happening now. But at the same time, I think probably the best description is I have to have an abiding belief. And anyway, Jesse Livermore was talking about actually just have a hankering to sell sugar or buy sugar or do something like that. And he didn't know why. Oh, I know what it was. It was a railroad. And he just had this huge feeling he had to actually buy or sell short a railroad. And he didn't know why. He was on vacation, so he sold 3,000 shares short of it, and then came back and sold another 7,000 shares short to New York City. But he didn't know why, and then, of course, the next day there was a earthquake, and he made lots of cash. And he just always had these hunches that he said he had to kind of obey. I'm just the opposite of that. My hunches almost always are 100% wrong. I was talking to somebody in the den on Thursday, and it was everything I could do but short gold on Friday, thinking that it was going to blow apart. But I did not. I did not, because normally when I feel that strongly about something, I'm almost always wrong. It's when I'm extremely nervous about positions, like a cat on a hot tin roof, that I tend to move things, that I tend to make money, let me put it that way. It's never easy for me. It's always difficult. And what else do we have going on out here? Okay, and well, what else? I'm just looking at a few things moving out here, see if anything truly changed. We're up 2 points on the S&P cash, 1.93 billion shares on the New York Consolidated Tape. And, give me just a second here. I'm moving a few things around. Oh, you can always give me a call at 877-927-6648. You can email me at path, that's P-A-T-H, at TFNN.com. And, of course, you can always post a message in the den. We're going to get to our stuff out here. I forgot that I got more slides to go on. In this day in history, in 1970, Stanford Research Institute scientist Douglas Engelbart obtains a U.S. patent for his XY position indicator for a display system, which we now know today as the computer mouse. I think maybe 6-9 months ago, I brought up just how much Steve Jobs was saying that the Microsoft people stole his Windows. And then I pointed out that there's a wonderful video that shows all this stuff in 1968 from Stanford Research Institute, where he shows a mouse and he shows a graphical user interface and everything else. And it's always interesting. Well, I can't get anybody to answer me a question, so I'm just going to assume that we are in HD today. If you are watching on Tiger TV, I want to thank Tom and the crew at TFNN for putting on a lot of work into getting us up to the next level. And that is to HD, especially for people watching on Tiger TV. You will now see our charts in HD, and they should be much clearer. Before, it kind of looked like you took a monitor and threw some mud on it. They were kind of compressed, and it was kind of about the best you could do. We've been waiting for better technology, and of course, if you've watched in the den, you basically see exactly what I have on my monitor. If you are watching on Tiger TV, sometimes it was a little bit compressed. So it is going to be a something that we do from now on, and that is both the hosts, my smiling face if you're watching on Tiger TV, and our charts will be in a much higher resolution for your chart enjoying pleasure. So hopefully you like that, and you might pass your thanks along to Tom for spending the big bucks for buying the new technology. I went down for the demonstration of it. It seems like an eternity to go back in August, but we are using that new stuff. Yes. When you own the company, you have to write the checks. Anyway, in 1970, just about everything we looked at for computers was thought about, and it was thought about well before anybody made a Apple in their garage or started Microsoft or did anything else. So many years later, Steve Jobs used to say that great artists copy, good artists copy, great artists steal, and just about everything that we've thought of before has come before, and there's not much new under the sun, dear Horatio. Chips Ahoy. Of course, Apple and Samsung have been in a big food fight for a long time over Samsung getting in the smartphone business. They basically told Samsung to stick it and decided to go to Taiwan Semiconductor over the last year. That has caused no end to consternation in the supply chain for Apple, and I have a feeling that they and Samsung have had enough. They've buried the hatchet. Samsung did make a deal that's probably worth somewhere between $3 and $5 billion. That should bring a lot of cash back into the bottom line of Samsung over the coming year. It will make 80% of all Apple's iPhone and iPad chip designs again, along with additional support chips. The deal is worth billions, according to the report. The loser on this is Taiwan Semiconductor. As I've said, even Apple was trying to go to Intel to get Intel to build some of its chips, and had to pay up. It just isn't any shortcut when you have better technology. Taiwan Semiconductor does not have it. Still 18 to 24 months late. We'll be back in just a minute. Give me a ring, 877-927-6648.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Probably put a little bit more juice in Samsung across the coming year now that the revenues will be back. So that is kind of interesting. Saw this on Bloomberg's, and I know it affects so many people that I thought I'd pass it on, plus the company that is doing it. A new blood test for Alzheimer's appears to detect the disease as many as 10 years before clinical diagnosis is possible, far sooner than any other tests in development. Normally, tests have like a, 20%, sometimes 10%, sometimes 50% false positives, false negatives. I was reading about this, and very interesting in this, they had 174 people, and it was dead on 174 times. Very rare that you get a test that is so good. Now, it's going to be expanded. But this also opens up a path where people can get tested and know that they may need to get any kind of treatment far beyond when they're actually going to get it. It basically looks for a specific protein, and apparently this protein is so different than everything else that nothing else gives a lot of false positives. At least 174 people, basically they tested people that were patients, healthy individuals, and diabetics, and other people. And normally, pretty statistically big that you test 174 people and you don't get one wrong shot. So pretty interesting out there. But anyway, the company is Nanosonomics. It's in Aliso Viejo, California, but one of the startups. I can't even find out if it's a public company or not, but I suspect that since they called it a startup, it is not. But I couldn't find anything else on it. Yeah. And of course, also reminds me of my favorite joke, Alzheimer's joke, which is always the guy that comes in to the doctors to find out what's wrong with him. And the doc sits down and he goes, well, you got Alzheimer's and you got cancer. And he says, the guy says, well, at least I don't have cancer. It's a kind of a deep joke, but anyway. Japan's triple dip recession. Japanese stocks, of course, are now in recession. When last time I looked, it was down 3%. I'm sure it closed somewhere around that 3% down. What I don't understand is pretty much we're doing exactly what they did. And, of course, I can see the markets really being weak over there, mostly because, just a couple of weeks ago, we had the biggest bazooka that old Abby Normal could throw over his shoulder and shoot. And so the question is, are we going to get any monetary policy reaction to this? I don't know if there's anything left. Was that the last big shot that they could give? Anyway, it looks to me like it is problematic. But what can you say? I would say, though, if we're doing exactly what they are doing, should we expect anything other than a triple dip recession over years? Of course, they're, 10, 12 years into this already? So maybe we should try something different. Just a thought. But that's it. It is a mad market. One of the stocks I thought most interesting, I think someone actually called in on this stock, and why it's kind of down here at the lows. Petrobras is, of course, going lower. I've been talking pretty much up into the election in Brazil about the two paths that country could head. One back into socialism, communism, and the other one probably into whatever is thought of as the capitalist side, which probably in Latin America and South America may not be a whole lot of difference, is there? But at least there was. She was talking about nationalizing a lot of these companies, and she, of course, won. They apparently have a lot of problems with payoffs, and it's not exactly clear from me reading the articles whether they were paying her off, whether they're paying off the opponent of the last election. It's about as clear as mud. But what is clear is that the government is investigating down there, and it's really unclear on who's controlling that investigation. I was talking to Andy Hick the other day about whether you could actually audit the Fed. He says it doesn't matter whether you audit it, it's who audits who audits it. And I said, well, that's true. I think we should audit the Fed, and all their books should be online, so anybody in the world that wants to could audit them. We'd find out really what was going on behind the curtain. We'll be back in a minute. Give me a call, 877-927-6648.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Come back. We're going to look at a few other stocks. Okay. Let's see. What else do we have going on out here? Anyway, Petrobras, kind of interesting. We've got some stocks up here. We've got a market that's not moving very far. Always liked what Jim Sinclair said early on in an interview with Tom O'Brien. I think it had to be in 2000. I still have the CD of it. And I think about 5 years ago, I gave it to Tom for that interview. And, of course, Jim Sinclair always said, any sideways market, watch for gold to have huge moves. I thought maybe it would be to the downside. And, of course, we got kind of a nice move to the upside. Kind of bothering that we didn't get any kind of pullback. And, again, don't like the fact that we're looking at silver and platinum weaker today. But we shall see. Affymetrix is one out here. I think I showed this on Friday, maybe not. The volume is still pretty much working, but these stocks not really coming back down. Volume to the down, but this was going up against the January 21st high, $9.80. Got to $10 on a little spike, but never could get even 50% of that volume when we came back up. And of course, back into the trading range. There's a nice huge gap around 850 on this thing. But as long as these markets are not moving tremendously, it looks like it's probably going to get very tough to get any wind in the back of shorts, no matter how light the volume is at these highs. AOL is another one out here. This one's kind of come back up to a little earlier high out here, a little spike. Light volume in it, too. Again, what I don't see is the super light volume from the last move down, which was October 16th, last low at 37.50, up to these highs. I would have liked to seen the volume really fall out if I was going to be short this, even though there is no volume back at these highs. The September 26th high had 7.2 million shares. You got 1.3 million shares. All that means is we're going to hang at these highs until it burns off, I think, some of this overbought condition, which is probably, well, it's taken probably, 2.5 weeks already, and may take us all the way into after Thanksgiving. Airmark Holdings, another one of these stocks that's kind of back up at these highs. This thing had a kind of a gap down with some decent volume. But again, we had 1.7 million shares on March 21st. We tried to get into, at least got into that candle with 1 million shares. Had a kind of a nice little dark cloud cover here the last couple of days. And again, you just don't get that energy. Normally, when these things are going to sell off and sell off hard, they test a high or they test the candle of the high. In the next few days, you want to be seeing that kind of volume start coming back into those stocks, and really not getting to that so far. Other things going on out here, of course, Halliburton is pulling back after announcing a deal to buy BHI Horton, whatever it is, BHI, to Baker Hughes. We saw a little bit of that action on Friday, a little bit more of a stunt here. Now, if I'm not mistaken, I think it came in at $78, and it is that would make it over this July 2nd high. But arbitrage, I think I saw this at 72.73 pre-market. Pulling back a little bit. A lot of people are thinking that this deal may not be a done deal, and being a little nervous about this. But as things move along, if it looks like everything's going to work out, look for that one to go to $78. Of course, Halliburton probably not looking at this so well, and off a little bit on its move. I think it was off about 10%. Yeah, it's got a lot of volume out here. But my guess is you're probably going to find about $48.17 tested here fairly quickly. Of course, a lot of volume out here today, so maybe they're not liking it as much as you would think. Boy, we're getting some kind of little storm here. Hopefully I don't lose my power, because it sounds like it's really coming down outside. Cinemark Holdings, another one out here. When we look at these, nice little pop. Volume about 10% lighter, but that's pretty much all these things need. The energy is not really coming out of them on this last leg up. Basically, the volume is stalled back up at these highs, and it becomes problematic. AGN is another buyout. It's going to be acquired by Activis, ACT, for $2.19 a share. And again, this got to $2.13 today. On these kind of buyouts here, normally they race right up to those highs, and that's it. These have kind of come back off of these, which is kind of interesting to see that kind of action. Normally these stocks just race up to whatever the buyout price is, and the ARBs start hammering it out. It looks to me like the ARBs are really hedging their bets these days on Allergen. And what do we have out there? ACT. Let's take a look at that one real quick, and then we'll look at IBB and see if there's anything out of that. Of course, you had a huge move in Activis today. Got up to 255, and it's kind of come back. So I know a lot of people putting some heavy moves back into this. But you had 14 million shares. It went over it. There's just not a lot of energy up and not a lot of energy down. But you're going to have to keep an eye on these because they will be in play between now and the end of the year, and between now and when the deal actually closes, if it does. EMC kind of been playing around here for a while. Another one up at these highs with a very light volume. Now this one, the energy off this last low at $26.11, much lighter. 28 million shares at that last low. But of course, it's going up against this high and going through it today. $30.18 is what the September 22nd high was. 47 million shares. We're getting into it right now. 10 million shares. On Friday, we had it on 19 million shares. So, again, fairly light volume. This one would be probably a little bit more interesting to me just because of the lack of energy on the way back up to test this high. So it is one of the weaker ones out there, but I'm not finding that many super weak ones. Some of these have gapped down on considerably high volume and are now coming back into their gaps. These would be some other ones I would consider probably after the first of the year. But if something really horrible happened in the market and we started to slide, I would take a look at these first. The finish line, FINL. This thing came down on earnings pretty hard on the 26th of September with 5.2 million shares. It's tried to come back and fill this gap mostly. It's kind of playing around in it. But basically you had 744,000 shares on Friday. You have 343,000 today. But again, you know, 4 points back to the bottom. I'd want this thing maybe you get it real lucky. This thing closes around 29.50, something like that. Fills that gap with no volume. And then you get to take yet another look at it. Ingredient Corporation, INGN, is another one of these with super light volume at the highs. The energy, again, too nice for me on the way back up from this last low, October 15th, 770,000 shares. Just a couple of ticks under $70 on the October 15th low. But the last high was the September 19th high at $80.54, 820,000 shares. Of course, we're breaking through that and going to hold above it with 200. What do we have so far today? 300,000 shares. There isn't anything above it. But again, these, you know, the energy was actually a little bit better than the down energy from this last leg. So it's kind of tough. We talked about J&J last, and it certainly looks like this is another one that, as we've got, it just can't get to the September highs that we've had in most of these stocks. But the energy wasn't all. Now, this one actually is something that you want to probably keep an eye on, because this thing has what? 1, 2, 3, 4, 5 dojis up here in the last buck or two with a J&J, which makes me think that there's probably going to be some kind of announcement coming out, or some kind of move, at least significant move. Normally, if it just stocks will go sideways. You get a lot of dojis like this. Something's going on normally behind the company. Either someone's selling it at the top and there's a bid just above it, or there's a bid just below it, and they're trying to hold this thing up. But normally, a fairly good indicator when you get that many dojis that there is something going on. You want to keep a close eye on it. J&J, of course, tried to go through its September 24th high, and that was at 108.77, 13 million shares to 9.3 million shares. You know, what else can you say? It came up there. It was 4 million shares short, but the energy from the bottom actually fairly decent. It's just when you get back up to these highs that it's very tough to find any new buyers. Another one, Lincoln National Corporation, another one of these testing highs. But again, this is one thing that you got to watch out, and that is when I'm talking about last low compared to the last high out here, I want to see, or in a short candidate, or when I think it's going to go down, I want to see basically the same energy down and the same energy up. But again, you get to these highs. September 19th, this thing had 2.8 million shares at $56.52. We've gone a few ticks above it to 56.78. But then this thing just goes sideways. And while you can sit there and slowly chew through these highs up at these levels, normally when it goes sideways like that, you can go sideways for a while. But start watching this thing get a few more. There'll be some people short on one of these stocks, and they'll basically, which is why I hate being short those particular stocks. Speaking of that, let's take a quick look at the thing. Okay, we're up 2 points on the S&P cash. We're off 13 points on the NASDAQ. And I want to look at how much time we got left. 3 minutes. Sonic Automotive, SAH. Now, I think you can make a fairly decent case that this isn't a long-term ABC down. And when we take a look at this, let's set this up for this. With this, we'll make $21.76 our B point. And we'll make this last high at 26.28. It basically went past that 618 retracement that you really look for, but instantly then came back and gave kind of a little reversal signal. Of course, Joe DiNapoli called these either railroad tracks or tuning fork tops. And it's not uncommon to see these. Energy was actually extremely good back up off this low, and people short on this since, and that is really where your support comes in 77 cents. Excuse me, those are the 2013 lows, and my guess is this thing is setting up to come back to those lows. Not a bad move out here if you had that short somewhere around bucks to $20, but my guess is you might find this thing fooling around between this $25, $26 level till the end of the year. These things don't always have to just break instantly, although this thing has shown kind of some weakness. But light volume today out here makes me think it's probably going to go sideways for a while. I want to look at Apple. What's interesting today, you don't see a great deal of the action that you saw in Apple today, but very interesting. Spiked to 117.28. There was some more rather dubious press releases out about them making a ton of cash in China by using some kind of other pay system. But it was very unclear from the press releases, and I never could get anybody to answer. Using Apple Pay was such a great deal. Thought of that later after the day was high. Probably what's putting most of the drag on the NASDAQ out here is we're off at 12.5 points. 675.88 on last tick on the NASDAQ with 1.16 billion shares.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight,
thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. $9. Click on the Primal Edge banner on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise guide. You'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important information to help you make better trades in the gold market. Don't let the next bull running gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology, $1,000 and Might Been a Millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David is an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. When you first learn something in life, you have the most questions as you begin to apply that knowledge, which is why Steve Rhodes came up with the idea for his 7-week trading program. It all begins Saturday, November 22nd. And when Steve Rhodes will host a live 3-hour morning workshop where he'll teach his attendees the precise methodology he uses 6 each Monday morning, discussing the possible alerts, currently setting a confident in applying what you've learned so that you can begin navigating the market on your own. You can sign up right now for this entire 7-week trading program with Steve Rhodes for a one-time payment of only $395. If you're a Mastering Probability subscriber, then you can save an extra $100 off that price. For all the details, visit the front page of TFNN.com right now.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, Tom will bisect and dissect the markets. The Tom O'Brien.
And as we come back, I don't even hear myself. Am I there? Yes, I am. I scared myself. I hit the wrong button out here. Okay. If I can type and chew gum at the same time, I'd have it made. But again, hopefully you're checking us on TV where we're now in HD. Everything is running smoothly. I know Tom O'Brien will be coming up here in just a minute or two, and you'll be able to see him. He's ready for his close-up in HD for his show for the next 2 hours. Anyway, looking at these markets to see, had a question that in on IWM, and, I just don't see a great deal out here that gives me a big bias one way or the other. The energy on the way down is exactly what the energy on the way up is. It's almost exactly the same. Shares, this high we had 39 million shares. When you compare the September 3rd high to this high, lows, you actually had some high volume down here, which makes you think you're going to get tested. But my guess is you're going to have some kind of movement out here. You're going to see all the volume fall, and then that will be the next run back here to the 103.54. Everything above that was a surprise to me. Thank God I went full tilt boogie on those calls down at the bottom and made my cash, because I'd be very worried to be up here. We had that one huge day with Abby, normal, and throwing some cack out here, but getting taken to the cleaners by the end of the year. This is a time without serious movement. That they can just turn the heat up a little bit more on you and boil you like a frog, which is something I dislike. So I'm more than willing to play individual stocks here. I advantage in playing, and I don't see a lot of trader. You'd have to say that this thing low back here at 103.54, but my guess is that you won't get a chance at that 103.54 until after the first of the year, which I suspect we're either going to crack right then, or we're probably going to crack sometime in May. If this market doesn't crack. Really insane of these stocks are trading, that if we are going to have a chance to come back and test that 103.54, it will be shortly after the beginning of the year. So what else do we have going on out here? Let's take one last look at it. Okay, we're up 2.79 points on the S&P cash at 2042. 2.2 billion shares on the New York Consolidated. Just not a lot out here to yell or scream about. Of course, Tom O'Brien is warming up, and maybe he'll have some nice things to talk about in gold. I'll be looking forward to it. In the meantime, remind yourself to sell when you can, not when you have to. And catch me here tomorrow on HD.